Taking a look at today's interest rate markets, let's look at the 10-year note futures as they're realizing some further selling pressure here today. We're seeing them down now for a sixth consecutive session. And today's price action, we're looking at a low of 131.07, currently 131.13 in the December futures market. And we're seeing volumes picking up across the board as well. So very heavy trading volumes. As we are seeing the futures markets now breaking down to levels that they haven't really traded at for quite some time. And when you look at some of the factors, I think why we're seeing this dynamic unfolding, it really has to do with the Fed and the continued message and the expectations, I believe, as we continue to move through the Fed decision a week ago. But now we're getting some testimony on Capitol Hill. Fed Chairman Powell this morning indicating that he expects inflation to remain elevated for an extended period of time, more so probably than what the market had possibly anticipated, that they were incorporating into their structure. And with that, it does appear that that's continuing to keep pressure on the Treasury markets, and that's why we're seeing the selling pressure persist once again today. Now, looking at the yields, 10-year yield, 154 basis points. So we did clear the 150 basis point level over the last 24 hours. Now firmly in the middle of that level, 154, that is up 6 basis points on the session. I also want to point out that the yield curve is shifting higher now. We are seeing it continue to steepen over the last couple of days, and both now with the 20s and the 30-year yields now above 2%. So we have not seen those levels in quite some time. Certainly from the 20-year standpoint, it's been quite some time since it was above 2%. So again, the shifting dynamic there with the steepening of the yield curve, heavy selling pressure on the back end of the curve today when you look at the activity in the trading environment.